Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really pretty big week for the US stock markets last week. For the first time, you had many of the big sort of tech companies all reporting in the same week. Microsoft, Amazon, Apple, Google. And really, when you look at their results, they didn't just beat their estimates, they just sort of smashed them out of the park, really. Incredible beats, and really sort of pointing to some pretty good guidance going forward as well. So on the back of that, the US share market's trading pretty well. What's interesting though, as well as possibly a little bit of divergence now between the Treasury Secretary and the Fed. Fed Powell's testimony last week, he's pretty adamant that rates weren't going up anytime soon. They've got this dual mandate of inflation and also jobs growth as well. And really pointing to that, you still got about 8.5 million jobs needed to be found before we get back to pre-COVID levels. But on the tape this morning, Treasury Secretary Yellen has come out and said that rates may need to increase just to stop the economy from overheating. So that's sort of quite interesting, maybe something to watch, because certainly the US economy is starting to pick up, really and gain a little bit of momentum now as many of the states are starting to ease their COVID restrictions. Most notably in Florida and New York, that potentially could be back to pretty much sort of open states now by sort of mid-June. Now that's all on the back of obviously some pretty major sort of lockdowns, restrictions, but also as well obviously the vaccine rollout that is really pushing along at a pretty good rate. And that's sort of quite interesting when you compare that with other countries. Obviously India is a real epicenter at present. They are averaging over 300,000 new cases a day. And pretty much the health system in India now has almost collapsed. I suppose the other big question mark against the US economy as well is potential tax increases from the Biden administration. So far they seem to be reasonably well received. Most sort of people that the higher taxes are going to be sort of hitting really don't mind paying a little bit more in tax if it is obviously beneficial for the economy. Interesting in London as well this morning, we had the first sort of meeting, sort of face-to-face of G7 ministers, and that's the first time that's happened in a couple of years. Now again, that sort of all points to the fact that the world is gradually getting on top of this virus. It hasn't beaten it yet, but it's gradually getting on top of it, and certainly sort of travel, etc., is starting to sort of ease and get back to something that looks more like a more normal stance. Now, obviously, the UK has done pretty well. It's starting to ease its COVID restrictions, and again, there's a little bit more movement coming out within the country now, and that's obviously been pretty welcomed. But you compare that with Europe, and certainly Germany's going through another sort of lockdown, and it's really getting pretty dire as we sort of see this sort of second and third wave coming through. Now, obviously, that's pretty important for many of the southern European countries that really rely on sort of tourism over the sort of summer period to really keep their economies going. So it will be pretty interesting to see how this sort of plays through. Certainly, many sort of analysts and economists now are reasonably optimistic for the UK economy. The EU is sort of moving along at an okay-ish rate, but really needs to get on top of this virus. Our oil on the back of this is still, trading reasonably well, and it's just going to be interesting as economies do start to reopen, where there is a further increase in demand for oil. Australia is still pushing along at a pretty reasonable rate, being buoyed by sort of, the higher iron ore prices. Commodity prices doing pretty well, and again, the sort of reopening of the economy. You see now flights between New Zealand and Perth being reinstated after that sort of partial lockdown. And again, things are getting back to a more sort of normal stance. But things are certainly moving in the right direction in Australia, and gradually these restrictions are being, say, sort of removed. You've got tourists coming in from New Zealand now. There's also talk about a potential sort of travel bubble between Australia and Singapore. And all the time as well, there's still that pent-up demand for money that hasn't been spent during the sort of COVID lockdowns. And that's really sort of, the consumer out there is really waiting to go and spend that money. Here in New Zealand, sort of heading towards the budget now on May the 20th, and that's going to be very interesting to see how that sort of plays through. The finance minister, again, has said it will be a COVID budget. It's all about recovery, and it's just going to be interesting to see what sort of tax breaks come through, but also what sort of spending takes place as well. Because now sort of 4 years into this sort of Labour term, and potentially most of the big sort of plans they had sort of 4 years ago haven't really come to fruition. Starting their plans to sort of solve the housing crisis, that really has, with sort of Kiwi Build, that was sort of an abject failure. Obviously the Auckland Light Railway as well was, didn't really get off the ground. So certainly the government's facing a little bit of pressure, and I say it'll be interesting to see what sort of budget comes through on May the 20th. Because overall, the New Zealand economy, again, is ticking on at a reasonable rate. Obviously it is suffering from the fact there's no international tourists, but that, hopefully will be partially sort of offset by that travel bubble between New Zealand and Australia. Also as well now looking at one being open in the next sort of week or so between New Zealand and the Cook Islands. But obviously that will favour the Cook Islands much more than New Zealand. Now, as we head into the end of June as well, time to check those KiwiSaver balances. Really need to make sure you made, enough contributions to get that maximum member tax credit. Looks like Sky City Entertainment as well have a bond in the marketplace, 6 years. Rate hasn't been set yet, but if you're interested in that, say go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.